Hey there, my name is Greg Lamb, the Small Biz Doer. This is Lesson 8 of Accounting 101, How to Record Mixed Payment Methods. Sometimes invoices are paid with a mix of payment methods, like a combination of a credit card and debit card at the same time. Take Akko here. She wanted to buy a new treadmill desk. Sitting isn't good for you, you know. When it came time to check out, she went to pay with her debit card. But the transaction exceeded her available balance. So embarrassing. She ended up having to use her credit card as well to pay for the treadmill. She put $600 on her debit card and $140 on her credit card. How does she deal with this in her accounting records? Well, there's two different ways that she can do this. The first way is to enter it as a single journal entry. You debit furniture and equipment, then credit her bank account and her credit card. So, we debit the furniture and equipment asset account, choose an ID of 1, and enter in the total amount spent, which was $740. Then we simply split the credit between the bank account and credit card accounts. We select the bank account, choose an ID of 1, and enter in $600. We then select the credit card account, choose an ID of 1, and enter in $140. What this transaction is saying is that Akko has increased her assets, this being the treadmill desk, by $740. And then she decreased her assets by taking out $600 from her bank and using her credit card for the remaining $140. So that's the journal entry, but what would it look like in accounting software? This is what a typical accounting software expense entry form looks like. You choose how an expense was paid for by crediting a payment account. You choose the expense itself by debiting an account. In Akko's case, she paid for her treadmill desk using two different accounts, but there's only one payment account field. This is how she can enter the expense. For the payment account, she chooses her first payment method, which is her bank account. Then for her account to debit, she chooses the furniture and equipment asset account. But you can see that the total is $740, and she only paid $600 using her bank account. So the solution is to deduct the $140 credit card payment using the second account line. To do so, she chooses her credit card account and a negative amount of $140. Now the total is $600. This $600 is what was paid using the bank account. This $740 is how much the furniture and equipment account increases by, and this $140 is how much was paid using the credit card. This transaction works because a negative debit is the same thing as a credit. So this is a tricky way to credit two accounts and debit one account using a common expense entry form like this. If we go back to the journal entry we entered, this is the exact same thing as the expense form entry, crediting two accounts and debiting one account. The downside to this method is that some software won't let you choose non-expense accounts in an expense entry form. It can also be a bit confusing to have a negative entry. This is where the second method comes in. In this method, Akko would enter the purchase first as an unpaid bill and then pay the bill two separate times, once for each payment method. So let's enter this as a bill. Like the previous entry, we debit furniture and equipment asset account, choose an ID of 1, and enter in an amount of $740. What's different is that since this is a bill, we credit the accounts payable account. So let's delete these two other entries. And then we choose the accounts payable account, enter in an ID of 1, and the amount of $740. Now, we just have to pay off the bill. The first transaction is to debit accounts payable, choose an ID of 2, and an amount of $600. This is the amount paid by the bank account. So we credit the bank account, choose an ID of 2, and an amount of $600. This transaction is paying off part of the bill, the accounts payable, using $600 from the bank account. We do the same thing for the credit card payment. We debit accounts payable, choose an ID of 3, and an amount of $140. We then credit the credit card account, choose an ID of 3, and an amount of $140. This transaction is paying off the remainder of the bill using $140 from the credit card account. In the second method, we create 3 transactions, so it's a bit more work. However, it's somewhat of a cleaner way to enter the purchase of the treadmill desk. In accounting software, this is how the entry would look. The first transaction is the unpaid bill. We see here that the payment account is accounts payable, and the expense account is the furniture and equipment account. After that, it's the first bill payment transaction. The first payment uses the bank account to pay $600. Even though accounting software bill payment forms don't show this, the accounts payable account is being debited. And then it's the second payment transaction. This one uses the credit card to pay the remaining $140. So this is 3 transactions instead of 1, a bit more work, but probably easier to understand for most people. Here's a recap of what we just learned. So now you know there's 2 different ways you can enter income or expenses that have more than one payment method. 1, you can enter the additional payments as negative entries. Or 2, you can enter an unpaid invoice or bill first, and then enter a payment for each payment method. The end result is the same. So pick your poison. In the next lesson, we'll learn how to record sales taxes on income and expenses. If you go to the smallbusinessdoer.com site, you can download this accounting equation cheat sheet, do some interactive exercises, quiz yourself, and even take a test to make sure you completely understand the material. Alright, I'm out of here. Catch you on the flip side.